Hello, and welcome back to the Macro Gamer channel. My name is Mark Cassingham. Today we're going into our Shield portfolio, our weekly numbers. This is for week 54 as of Friday, August 1st, 2025. Normally I do this on Saturday, but I'm going to be gone tomorrow, so I'm going to do this after market close on Friday. So we still have all the same numbers. I'm just recording it on Friday, and I'll likely upload it on Saturday after editing. But anyway, let's get into our Shield weekly numbers, because I have two portfolios now, so I make sure I got to emphasize there's the Sword and the Shield, two different portfolios, two different strategies, right? We're going to get into that today. But today is the Shield portfolio. So we're going to go over a bit of the differences between the two portfolios. So I have affectionately called these strategies together the weapons of finance. Specifically, the portfolio we're going over today is the Shield part of the portfolio. So the weapon is the shield. The weapons of finance is the shield. So these bullet points are kind of just a large, kind of high-level view of everything that goes on with this portfolio, just to give hopefully people an idea of what we're working with. So don't think too specific when you read these, think broad-based. But this portfolio is the primary portfolio. The Sword portfolio is ancillary. Ancillary meaning it supports the primary. So this is the primary. The Shield portfolio is the primary. This is my life's work, to put it in another way, right? As far as my investing individual career is concerned, this is everything I put my money into, because this is the thing I am most protective of. Keyword being protective, right? It's why it's a shield, right? I'm trying to protect it. So this is a defensive strategy. The Sword portfolio is an offensive strategy. Defensive strategy is trying to protect what you have, right? And the next bullet point kind of highlights that better, is preserving and protecting wealth. Wealth is determined by the individual, like what you feel to have to feel wealthy, like how much money you have to feel wealthy. To me, wealth is just whatever money you have that's extra, right? Like if you have enough money to pay the bills, if you have enough money to buy groceries, if you have enough money to go out, do whatever, blah, 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 then you have just extra money. Just set aside, whether it's invested, whether it's savings, you're getting a yield on it, whatever, right? That's your wealth, right? So this portfolio is designed to preserve and protect your wealth, what you have accumulated. You're not taking risk with it, you're being careful with it. For the growth of it, we have continuous and stable returns. So continuous and stable returns means not big returns, not high growth, not aggressiveness or anything. It's like the tortoise versus the hare, the old story, the tortoise versus the hare. The tortoise is slow, the hare is fast, right? So when you think continuous and stable returns, you think of the tortoise. You think slow and steady, right? We're slowly and steadily going to work our way up the economic ladder and earn more money, right? Continuous and stable returns, not aggressive, not high growth, just slow and steady wins the race. Balanced diversification. So we have 6 asset classes, not 6 stocks, right? 6 asset classes. We have we have an S&P 500 ETF. We have a diversified commodities ETF. We have a diversified bond ETF. We have a gold ETF. We have a US dollar ETF, and we have a Bitcoin ETF. So we're well diversified with the different allocations in our portfolio. It's not just all stocks, or it's not just all bonds, or not just all commodities, or not just all crypto, right? It's just diversified, right? Across all of it. And it's balanced, so each individual asset isn't so much where it dominates the entire portfolio. There are points where, as an example, gold is a big player in my portfolio right now at 45%, right? But there's still the other assets in the portfolio that make up the other 55%, right? So it's trying to be balanced diversification. We ride our winners and we sell our losers, right? So if gold's winning or doing good, we're going to ride that. If US dollar is doing bad, we're going to sell that, right? Global economic resilience. So whatever's going on in the world, which is something every fucking day, every fucking second, right? We need this portfolio to be strong. We need it to be, as it implies, resilient, right? As of today, recording this video, August 1st, 2025, officially, Trump's reciprocal tariffs have gone into effect. The last time you saw the devastation of Trump's tariffs was August 2nd, where the market fucking tanked. And then 7 days later, it was just so bad, everything going down, that he did a 90-day pause, right? And then he extended that out, and then he renegotiated, and he just did all this shit to push it out further and further and further. People jokingly call it the taco. Like, Trump always chickens out, the taco trade, whatever. I don't care. The point is, all this randomness fucking happens. So I need this portfolio to be defensive. I need it to be strong. I need it to preserve and protect. I need continuous and stable returns. I need balanced diversification. Global economic resilience, right? I need to protect myself, right? That's what this portfolio is about. And then dynamic management. That basically means that I'm actually actively managing this portfolio. Not day to day, where every single day I have to make a trade. It's just every day I'm looking at data. And when the data gets to a point where I feel I need to make a change, then I make a change. And then I show you my trades, and we'll get to that slide later towards the end of these slides. And you'll see every time I've made a trade and I've time-stamped it. So the dynamic management is I'm actively managing it. These positions aren't static, right? So I think of both these portfolios, the shield and the sword, as my weapons of finance, right? As I affectionately call them. I love them both. But the shield is the primary. It is the main portfolio. It is my life's work. The sword is the aggressive, balls to the fucking wall, do whatever you can to fucking make a profit, even if it means going to zero on some shit. Like, I don't care. That portfolio can go to zero. I don't fucking care. This portfolio, I refuse to allow it to go to zero. I will fight to the death to make sure that doesn't happen, right? So the shield portfolio is the primary. I want to make sure I differentiate between the two. So I've added an extra slide in each of the slide decks for each portfolio just to make sure I highlight it. So I'm spending extra time on this one this specific week because I'm adding this in for the first time. So I want people to look at this and kind of understand a little bit better of why and how this portfolio operates. Anyway, now to the normal slides, probably people are used to, all 7 of you, or all 8 of you now. So we have our portfolio net worth. This is the total return. We're at $664.97. We have a total market gain of $52.08. And we have a total market return of 15.11%. So we're up 15.11%. We have our 6 assets, gold still being the dominant player. And I thought about changing, funny enough, I thought about changing gold's position because it looked like a lot of shit was going down. Gold was breaking the 3,300 level, which we'll get to in the charts. But then because of Trump's reciprocal tariffs going into effect today, the market took a crazy fucking turn, right? Crazy fucking turn. So I'm glad I didn't do anything and I just waited and watched, but we'll go over the numbers and we'll see. So here is our weekly data for week 54. This is from July 25th to today, August 1st. We have no net cash flow. You can see the curve on our chart. So you can see it coming to the 31st, coming it down. And then, like I said, going to August 1st, there was a rise, right? This is crazy. There was a sell-off, and there's a bit of a rise, but the rise is actually coming from our gold in our portfolio. And we'll show that. We'll show the numbers. So we have a market loss. I know it says market gain. We have a market loss of minus $1.81. We have no dividends earned. So we have a money-weighted return of negative 0.27%. So it's a volatile week. And Friday, honestly, was like the most volatile day of the week. Crazy. Because again, reciprocal tariffs start today. Since I'm filming this on Friday, I can say this. It happened today, right? And multiple people put up lists of all the tariffs on all the countries all over the fucking world that are going into effect today. So Trump and his fucking global tariffs. Somebody made a joke that he's going to tariff all the other planets in the solar system, which was hilarious. But like, that's kind of what's happening. He's tariffing everything, right? So a lot of volatility on August 1st, 2025, because that's the day the reciprocal tariffs went into effect. Now watch, Monday happens and everything changes. Who knows? Maybe the taco trade is still in effect and he'll change it. I don't know. Anyway, here's our monthly data for week 54. This is from July 1st, 2025 till today, August 1st, 2025. We have a net cash flow of $30.63. So as you know, every week we'd auto deposit $10 in the cash account. And when the cash account exceeds $25, it then auto deposits it into the investment portfolio, and it allocates the capital to each individual asset based on their percentage weighting, right? So that $30 went into the cash account, or went into the investment account on July 16th. Covered that last week, so we're in this week, so we already know about that. We have a market gain of $4.93. We have a dividend earned of 31 cents, which gives us a total gain of $5.24. This gives us a money-weighted return of 0.81% positive. And you'll notice there's this View Benchmarks button now. So the M1 Finance, which is the platform I use, they've added some new features. I'm not interested in using this benchmark feature, but it's in there now because I timestamp every single chart every single week because I want people to be able to follow along. So you're going to see that in there now. But I don't use the benchmarks as a reference point. I don't care about what the benchmarks is. I'm running my own strategy, which I'm showing in these videos, right? I'm not worried about benchmarks. I don't care about benchmarks. I'm showing my investment strategy. Anyway, I just want to point that out because every time they change something on this fucking website, things look a little different. I just want people to see that. Anyway, sorry. Quarterly data now for week 54. So you have our chart. You have four steps. I call it the stair step pattern. So every time there's a step, there's an auto deposit. Here you go. 1, 2, 3, 4. So 4. This is from May 1st, 2025 to August 1st, 2025. So the past 3 months. You have a net cash flow of $121.10. So basically $120 of just cash. That's those 3 times, 30, 30, 30, 30 equals 120 over every 3 months. Because again, the cash accounts, when it exceeds $25, then it deposits it into the account. Over this 3-month period, we have a market gain of $24.70. And we have a dividend earned of $1.12, which gives us a total return of $25.82. Which gives us a money-weighted return of positive 4.43% over the 3 months. So that's our quarterly data. And now our yearly data, because remember, we're post 52 weeks now, so we have more than a year's worth of data, which is phenomenal. So I get to use the yearly data chart. This is my favorite chart ever. This is the most important chart of my fucking investment career. This is the one I care about the most. Yearly data. Year over year, yearly, whatever you want to call it, I don't care. It's just 365 days of data. I don't do the daily shit. I don't fucking care. Yearly data. Right? Long-term growth, long-term wealth preservation. That's what it's about. So week 54 of the yearly data. This is as of August 1st, 2024 till today, August 1st, 2025. A full year. We have net cash flow of $516. So every third week, again, you're going to have a $30 deposit. That's where you see the stair-step pattern happening. So $30 deposit, $30 deposit, 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 all the way up, right? All the way up. So dollar cost averaging into the account, as well as diversification of assets, as well as actively managing the portfolio. That's our strategy. So we have a market gain over this 1 year return of $48.92. We have dividends earned of $3.04, which gives us a total gain of $51.96. This will give us a money-weighted return of positive 14.66%. This is the yearly data. My most important chart ever. Every single week going forward, I'm going to make sure I let people know how much I look at the yearly data. I'm a long-term investor, right? Especially with the Shield and the Sword portfolio. They're both long-term. It's not day-to-day trading. That's not what I do, right? I look at long-term, year-over-year or yearly data, however you want to call it. Last, but certainly not least, all-time data, all 54 weeks on one chart. So this is from July 19th, 2024 till today, August 1st, 2025. We have a net cash flow of $616.28. So you have our initial deposit of $100 and every third week a $30 deposit. That's where you get the stair-step pattern, right? Because we're dollar cost averaging every third week. We have a market gain of $48.69. And we have a dividend earned of $3.39, which gives us a total gain of $52.08. This gives us a money-weighted return of positive 15.11%. So our yearly, just to go back to it, is at 14.66, and our all-time is 15.11. So ideally, on a yearly perspective, I am greater than 10%. That is my absolute ultimate goal with the Shield portfolio. Greater than 10%. I don't care if it's 500%, which would be insane. That would never happen. But like, if it's greater than 10, that's all I care about. If it's less than 10, then I look at my operational performance. Above 10% is optimal, best case scenario, optimal performance. But less than that is operational, which means I have to make this work. And that's between 5 and 10%. Less than 5% is suboptimal. That's shitty performance, right? It still might be positive, but it's shitty performance. And then anything negative is just portfolio suicide. Like, it's unacceptable. Not in this portfolio. In the Sword portfolio, I can absolutely go negative and not give a fuck, because that portfolio's volatile as fuck. Like, that's the point. It's supposed to be wild. It's supposed to be crazy. It's supposed to be big moody swings, left and right. Like, this portfolio is supposed to be measured and balanced, right? But that's fine. So this is above 10%. I'm happy with that. That's all I care about. That's the all-time data. Now we get into our weekly percentages. So on the right, we have our target weighting. Gold still at 45% with our GLD ETF. Bonds at 15% with our GOVI ETF. Commodities at 15% with our USCI ETF. US dollar at 10% with our UUP ETF. RSP at 10% with our, stocks at 10% with our RSP ETF. And Bitcoin at 5% with our IBIT ETF. IBIT, probably said that really fast. Anyway, this is our weekly percentages. And these colors and the layout of this looks slightly different, right? I can tell they made little modifications to their site, which is fine, whatever. Just whenever they do it, I'm like, it looks different. I'm just like, I gotta get used to the difference now. But anyway, don't complain about it. So this is our weekly percentages, week 54. So gold up 0.56% for a market gain of $1.66. Most of this shit right here happened today. Gold, I think, is up like 2+% today. Not this week, today. There's a big surge in gold and there's a big drop in stocks. And we're going to get to that, you'll see right now. Bonds up 1.55% for market gain of $1.55. Also, big jump in bonds today. Also, big jump in bonds. Because the yield, the 10-year yield went down. Well, all yields probably went down today. But the 10-year yield went down, so bonds came up. Shocker. This one here is a little bit disappointing. Commodities, or USCI ETF, down 2.58%. For a market loss of $2.60. This is horrific. 1 week, this is horrific. So gold fucking surged and commodities crashed. So commodities as a whole, because remember, this is a bulk ETF, has a bunch of different commodities in it. It crashed. This is an interesting one. US dollar up 1.40% for a market gain of 92 cents. This is one that's the dollar's been losing a lot recently, and now it's back at the 100 level, which is crazy. So the dollar's getting stronger all of a sudden. Stocks, here we go, down 3.29% for a market loss of $2.24 in 1 week on an equally weighted ETF. The stocks crashed hard, and a lot of it was, again, today, Friday, August 1st. The stock market crashed hard. Right? Those tariffs are kicking in, and everyone's freaking out. And also, Bitcoin crashed 3.24% for a market loss of $1.10. So Bitcoin also crashed. So crazy week. Mostly the action's happening today. So we have portfolio monthly data. We have gold up 0.54% for a market gain of $1.57. We have bonds up 0.52% for a market gain of 51 cents. We have commodities up 0.11% for 11 cents. We have US dollar up 2.55% for a market gain of $1.62. We have stocks down 1.24% for a market gain of $1.81. Market loss of 81 cents. Fuck. There we go. Struggling. I apologize. And then we have Bitcoin up 7.32% for a market gain of $2.24. But of course, you look on the weekly, it's been down. So monthly is fine. But like I said, Friday today is fucking crazy. Quarterly is actually not looking good overall for every asset, honestly. Gold up 3.98% for a market gain of $10.46. This is something I've seen north of 10% in a quarter. So barely 4% is not the best. Bonds up 1.29% for market gain of $1.17. Commodities up 6.14% for market gain of $5.23, despite commodities taking a hit today, literally today. US dollar up 0.13% for market gain of 8 cents. Stocks up 7.57% for market gain of $4.30. I'm sure that was shaved off a lot by today's loss. And Bitcoin up 16.72% for a market gain of $4.58, also probably at a loss today. Then we have our yearly. So the yearly will not reflect properly on GOVI and IBIT because we not have had them for a full year, but that's fine. Gold up 31.57%. Pardon me. For a market gain of $37.53. Bonds haven't done shit. It's not gonna, and not even a full year, so not going to talk about it. We'll show it on the charts. Commodities up 14.84% for a market gain of $8.18. US dollar down 8.92% for a market loss of $5.10. You know, I saw this above 10% on a yearly chart, so this is actually starting to reverse, even though it's still fucking bad for a year, but it's actually starting to reverse. Stocks up 1.99% for a market gain of 94 cents, so not much over a year. And Bitcoin, I bet not a full year, but still a lot of data, up 83.63% for a market gain of $11.42. So Bitcoin, relatively speaking, still doing good. And then our all-time percentages. We have gold up 33.22% for a market gain of $38.08. We have bonds up 0.24% for a market gain of 19 cents. We have commodities up 14, and again, bonds not a full year. Bonds. This is from February, basically till today, so not even a full year plus. Commodities up 14.49% for a market gain of $7.85. US dollar down 9.06% for a market loss of $5.06. Stocks up 2.09% for a market gain of 96 cents. And Bitcoin up 83.62% for a market gain of $11.43. So that's our all-time data, week 54. Here are my position changes. I have not changed anything. I was actually on the cusp of wanting to change my portfolio either today or next week. But then tariffs kicked in and the market fucking flipped. So I'm like, let's just keep it chill. Especially since gold is up over 2% and gold is the dominant player of my portfolio. So I haven't changed shit. See what happens. No portfolio transactions this week. we have Illuvium staking dashboard. So we've added some new ILV tokens. So now at the current token price of $12.27, we've added $24.29. I'm sorry, 24.29 ILV with a market value of the current price at $298.06. And with the extra cash in there, we're at $298.40. That's our current ILV. So you see we have this withdraw button right here, so we can officially, if we want to, withdraw this 1.32 ILV. Now I haven't looked at the exact price, but I know it's been coming down, so I know if I were withdraw and sell, I would be selling for a loss. But again, I want to collect revenue distribution. I want to profit off other gamers, so I'm going to leave it staked for now. But here's all my stakes for page 1. Here's all my stakes for page 2. And the new one, page 3. Oh my gosh, we have 3 pages now of deposits. Most recent purchase, 2.67 ILV, which I deposited on July 29th, so like 3 days ago right now. No revenue distribution claimed. So, no new revenue distribution. We have the original claim 0.024, which is 3 individual payments for a current value of 0.29 cents. And then this is the transaction where right here on July 29th, 2025, I bought 2.67 ILV worth. So it says 33.84, but remember there's fees and transactions with moving the money around. I just basically put in 40, and I don't put in extra to pay the fee. I'm just like 40 includes the fee, but a 2.67 ILV, which is right here, deposited on July 29th, 2025, and it locks in 361 days. So those are our weekly numbers. So now we get into the charts. So our gold ETF, which definitely crashed below this green line right here. So actually zoom in. So you see this red line coming down, and it actually crashed just below it. But then look at this sharp spike. Whoop! This is all today. Like I said, August 1st. This is global tariffs back on. All right, global tariffs back on. So now we're back above the green ascending trend line. I don't know if it's going to sustain itself, but remember, going back to October 2023, gold has been in a strong uptrend. Even broke out of its strong uptrend to make it even higher trend, but now it has this descending line. Maybe we can just change this line. What do you think about this? Are we going to extend it out like this now? Because we're going to hit these peaks. Maybe we'll do that. Move it to the side. Extend this. Extend this. There you go. We'll tie in these peaks. We'll see if something happens. By the way, gold's still doing good. Although it seems like it was a bit of a crash, but again, tariffs kicked in today. Gold fucking shot up. It's at 2.03%. Up 2.03% today. Right? Today. And the commodity is a sharp spike down. Remember, we have these 2 trend lines. We have this lower trend where the majority of the trading was happening. And then it popped up into this upper trend, which goes all the way back to February of 2022. Whew. And there we have this crazy peak. This is probably post COVID spending. And then the trend started popping back up into this upper trend channel. But now it dropped down pretty hard. So commodity selling off hard. Still in this upper trend. This is the upper trend. This is the upper trend. Right, still doing good, but a big crash down. Then we have bonds. Dude, this spike right here, look at this fucking thing. Zoom in on this. Look at this again, this is the power of a president right here. It's fucking crazy. Dude, look at that spike. This is uncertainty in the market right here. Look how erect this fucking candle is. Look how fucking erect it fucking stands. It's crazy. So this is kind of why I hold 50% of bonds, even though if you look at this shitty fucking pattern, it's been down fucking since the beginning of the COVID pandemic. It's just only kind of, quote, kind of found a bottom. It looks like it's starting to creep back up, but you know, it's just so much volatility, and I don't know what the fuck's gonna happen with these tariffs. So, you know, I'm mostly in gold, bonds, and commodities, you know, by a long shot, like fucking shit, like 75% or some shit of my portfolio. So I'm not comfortable in stocks, is all I'm trying to say. But in the sword portfolio, I give no fucks. Let that shit run wild. Right, you'll see that in the sword portfolio update. That's our bonds. And then US dollar, look at this fucking resurgence in the US dollar. Look at it smashing above this red line. And again, let's have some fun. Well, actually, this has been going up pretty good since February into March. Oh, no, not February. Or Friday. February. Friday, July. Friday the 25th into Monday the 28th, 29th, 30th, 31st. And then it sold off. All right, but still pretty strong coming up. Right, which has been very interesting. So this has been turnaround. Now it's above the red line. This is kind of like back in May of 2025, where we broke up and then it came down. So we're going to see what happens to the US dollar, still keeping it at 10%. And then stocks. Oh my God, look at this shit breaking the line. And this is equal weight, by the way. Let's look at SPY. Let's look at the SPY. Oh, look at that candle. Oof. Look at this. Boom. This is right here. This is August 1st right here. All this right here. All this right here. This is my measurement tool. All this right here. That's August 1st. You know, it's, I know it says 1.87, but it's kind of around that number. I don't know the exact number. I'm not going to fix it, but 1.5%. Just right away lost. Not to mention it peaked on July 30th, and it's been coming down. But crazy to see stocks come down. There's been a lot of up momentum, you know, so it's good to see them sell off. But again, August 1st, today, 2025, global reciprocal tariffs. I don't care what anyone's political opinion is on that shit. It's just that shit is affecting the market. And this is the effect right here. And the Bitcoin also fucking puking. So sad. All the Bitcoiners out there. Look at this candle right here. Oh my God. Look at this candle. This is 31st. Yeah, this is August 1st right here. Just all dropping right here. Bitcoin's kind of like an early indicator of the shit that's going to happen in the market, which is fucking great. I love it. There we go on a 5-year. So still just slightly above that line. Just slightly above that line. But we look at on a 1 year, you kind of see it peeking over. Look on a 6 month, actually a 3 month, better. It's above this line, but look, it's starting to come down. It's starting to come down. So we're seeing uncertainty in the market. A lot of it's just tariffs, honestly. I know the jobs data is not great. I know the inflation data is not great. I know there's a bunch of other data that's not great, but I think the thing that people are most concerned about are tariffs. And I'm seeing it in these big movements of these large asset classes, like a total S&P 500 index, or the gold price, or commodities, stuff like that. So this has been a wild week. It's been very chill up until this point. I think a lot of people are waiting to see what happens on August 1st. And so far, I haven't heard, or I haven't seen, at least from the White House, where like they've changed policy. That can happen at any moment, right? Instant, it can happen at any moment. As of right now, it seems like these reciprocal tariffs are now in effect as of today. So we'll see what happens over the weekend and going into next week. The stock market thinks about it. Is it a big deal? Is it not a big deal? Is Trump always chickens out taco trade thing, or is he gonna stick with it? We're gonna find out. We don't know. None of us know. We're gonna find out. But anyway, that was the Shield portfolio update. This is the economic resilience portfolio. We're fighting against all the crazy shit that's happening. That's the point of this portfolio. Later on will be the sword portfolio update. That's the balls to the wall, no fucks given portfolio. So hope you appreciate both strategies of both portfolios. I They're very different, but the shield is the primary and the sword is the ancillary. So the sword is meant to augment the shield, right? To improve it. But anyway, as always, I hope you enjoyed the video. If you have any questions, comments, or criticisms, let me know, and have a good day.